Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today I'd like to go over weekly strategy roundtable discussion where we talk about current market conditions, Tradespoon and Yellow Tunnel memberships, the difference, and also any questions you might have about your membership or current market conditions. So I encourage you to type in your name if it doesn't appear, and also any questions you might have, and I'll make sure that by the end of the day I will answer all the questions. No sound, so looks like people can hear me. I would just say try to dial in using online. All right. This is for those of you who are new. Welcome. This is my brief bio as Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. So I'm very proud of that experience. Since I left Options Express, I started Tradespoon in 2012, Yellow Tunnel about a year ago. Tradespoon, my background is artificial intelligence. I have a master's degree in computer science. So Tradespoon is based on modeling and technology. And about a year ago, I started Yellow Tunnel, specializing in trading psychology. I think both fields are very important. And I think you need to master both fields in order to be a successful trader. So that's the reasoning behind the Yellow Tunnel. So I want to take this opportunity to say thank you to all the Tradespoon and Yellow Tunnel subscribers. Because of you, I'm able to do what I enjoy professionally, trading and managing my own money. I've been doing that for over 15 years, mentoring and teaching Tradespoon subscribers how to trade stock and options. And finally, I have a master's degree in computer science. Disclosures: trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account, based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance, and you can see the relationship between Tradespoon and trading block on the bottom of your screen. All right, before we get into a trading system, let's talk about current market conditions. So let me pull up the graph. So for today, the model predicted, if you look at today's list of stocks I'm trading, spiders 273 is overhead support. So the model sees the retest of the April lows, right? That's the main support, 273 level, and overhead resistance is at 286. We're currently at 283. And if you look at the trend for today, neutral, right? Not a lot of momentum behind the bulls, not a lot of for today's and for the 10 days. So momentum is neutral. If you look at the seasonal chart for Tradespoon, 4 of 4 predictions are higher that was posted on Sunday. So model sees that short term there could be volatility, right? The support was identified as 279. We actually broke that support this week. We were at 276. And on overhead resistance is 288. So long-term and short-term model agree on the support and resistance level. Long-term model sees that we are in continuation of the bull market, right? The market is up 33%, was up 33% from its lows and continues to go higher. And the model sees that, yes, short-term there could be volatility, but looking into end of June, looking into July, that the uptrend will continue, and it's only a matter of time for the market to reclaim the 100-day moving average. So my personal opinion, sometimes I agree with models, sometimes I don't. But I do agree with the model. I do see 272 mean a major support level, right? If we zoom in into this chart, we've tested 272 in April 21st. This is, I think, was a misprint. We didn't reach 273 level, but came close to 76. So this was the first test of 272 level, and that goes back to April 13th, right? April 13th, this was support. The same line was on March 20th. 273 has been a support if you go back in time. Let's see. 273 was a support in May of 2019 on the phase one negotiations with China. So this is definitely 273, 284 support has been the long-term support. So from technical analysis point of view and support, it's important for the bulls to trade above 270 level. I personally think that we will trade above this level. We might or might not retest it. Maybe yesterday, we'll see where we're going to close today. I think if we can close above this candlestick the day before the sell-off above 287, then I would say that short term, that's the support. And we will not break through that support. So 272 is a support. At this point, 294 is a strong overhead resistance. So market might trade in this range between 272 and 294 for the next couple of weeks, right? So depending on inflow of the news, whether on the positive side, we're waiting for the treatment of coronavirus, reopening of the global economies, and potential progress in the vaccine. So if those news come in, or additional stimulus package, right? If those news come in sooner than later, then market can potentially break through the 294 level, maybe by end of May or by end of June. If we have negative news, such as imposing tariffs on China with the specific steps, or prolonged lockdown in Los Angeles, Chicago, New York, where people cannot go back to work in July or August, that can bring the market to the downside and break it. I personally think that as long as we're staying above 260, we're in bull market. If we break 270 level, that will do, this is a 50% retracement, right? This is close to 50% retracement from low and highs. That will delay, that will probably create a U-shape recovery, where it will take several months for the market to regain 200-day moving average if we drop to 260 level. But I still think we're in the bull market, and I don't think we're in the bear market. I think that's the bump. You don't have to be correct. It's very hard to be correct exactly on these levels, right? I was off by 20 points on the downside. You know, when market starts selling off, I said that we will retest December lows, 2018 lows. We actually broke through that for 20 points. I said 280 would be an overhead resistance, 283, we broke through that by 10 points. The market can overshoot, but again, I think as long as the 260 level is intact, we are in the bull market, and that is, I think, the main point. It's hard to predict support and resistance exactly. You can trade, if you're short-term trader, you have well-defined stop levels. You're trading in these zones, right? Right now we are 10 points above 273, and we are 10 points below 293. So it's a flip of a coin, right? It's a 50-50 chance. Market can go up to 294 in the next couple of days, or it can drop to 273 in the next couple of days. So it's hard to trade in the middle zone, right? But at 293, if it reaches 293, then you do short the market. I would short the market, and I would put a well-defined stop level. If the market approaches 273, 274, I would go long, because this is where your odds of probability of success are great, and you have a well-defined stop levels. So buying at the support, selling at the resistance is one of the rules. The other one has an opinion on the market, right? If you think you're in bear market and we're going to have a prolonged recession, then definitely you're building more bearish positions, and with the expectation that market will retest the lows. If you believe we are in a bull market, or V-shape or U-shape recovery irrelevant, then any major pullbacks, you are going long, right, when you see it support. So I'm in the between V and U-shape recovery. I would wait for the next today. The closing of today is important. If we can close in positive territory, that would be a win for the bulls. But if we drop to 276 towards the end of the session as we go into the weekend, that would be a win for the bears. So I would wait for today and tomorrow, but I'm in a V or U-shape recovery campaign. If we don't retest 273 next week, then I think this is a V-shaped recovery and we're just going to continue going higher. And my view on the spiders is important for me because all the other asset classes are correlated and you can kind of derive them. Very important to look at the dollar if you're trading currencies, euro and any type of currency trader. I know we have some native subscribers. If you're on please relog in. Let me know if you guys can hear me. I can see my screen. Sometimes we get just. But if you can, if you cannot see if you can hear me but cannot see screen, try to relog in. So if you're trading, if you're native subscribers, if you guys trade in currency pairs, same thing. You have to. You have to have a view on the market, right? And the currency market will follow. So if you believe we're in a bull market, then this is the high for the US dollar, right? Potentially there's overhead resistance. I would personally short at 101 US dollar, buy euros. Or if it reaches 98.50, I would be long, short euro, right? This is a dollar. So this at this level, I would be long the dollar. At this level, I would be short dollar. But as long as the spiders, as long as we are in a bull market, V-shape or U-shape recovery, then the dollar will continue to make lower highs and lower lows, right? This pattern will continue, right? If you're bear on the market and you think we're in the bear market, then more likely or not, especially if we have prolonged recession, people will look for dollars, and the market, the dollar market will continue. So I'm personally bearish on the dollar. Same thing on Treasury. Treasury, if you trade in the Treasury market, this peak is main overhead resistance. At 172.50, I would short. I think Treasury prices will go down. 162.50, the Treasury prices will go up. But the theme, if you believe that if the market is going to continue going higher, it needs to do that with the support of financial sector, utilities. So we need higher. Slowly, yields will go up and the prices will go down, right? The Treasury prices will continue to move downward. So Treasury market is important. I would look at the VIX volatility. It's a good indication of how much uncertainty there in the market. We are continuing to making lower highs and lower lows, reaching 25. Historical average is 20. So we're basically going back to historical average in terms of volatility in the market. Right, so volatility is going in the right direction. I would keep that in mind, and I would look at different asset classes. Russell 2000 main support level, right? This was the first rebound on March 26. These are the lows April 16. We touched it yesterday at 117 level. This is a line in the sand for Russell 2000 small cap stocks. It's important for the Russell 2000 to hold on to this level next week. And if we can, then the path of least resistance would be again reclaimed to 100-day moving average. If we break through this next week, you will see a lot more downward pressure on spiders and the rest of the market, and potentially retesting 100. Same thing with XLF financial sector. We actually broke through this level, right, through the March 26th. Financial sector is one of the weakest sectors. We had a strong reversal yesterday. And currently this is a support, right? The April low for the weak sector, like financial sector and metals and miners. Right, we came close to the support level first April low, right? April low is around 16 level. We are at $17. The leaders, the technology sector, almost at 52-week high. We've seen Microsoft, Apples of the world, and Microsoft reaching the 52-week high. This is a pretty bearish price pattern, especially with US-China escalation of the rhetoric between US-China. So technology can potentially drag market to the downside, right? We're having 3-4 days in a row making lower highs and lower lows. So I would keep an eye on Apple's, Microsoft, Google. Right, this is a bearish price pattern. There's a lot of overhead resistance right now in the market. So that's the view on the market. How do you trade in this environment? Yellow Tunnel is a sister company of Tradespoon specializing in trading psychology. So it's very important when uncertainty rises, right, in the market, it's very important to talk about trading psychology, trading plan, which we'll cover. Yesterday we had a webinar with Nadex users on 3 key metrics for consistent trading results. So we talked about, I talked about a lot about trading plan, trading journal, trading psychology, and key concepts. Also understanding inner markets with Dr. Maneker. Every month we have Dr. Maneker who joins us. He's a trading psychologist. He's a clinical psychologist. He's also specializes in trading psychology, and he's a professional trader. So that's Dr. Maneker, and I also talking about managing extreme uncertainty and volatility, and how do you concentrate on things that you have control over versus not. So I encourage you to, it's a free site to open up an account and look through the these recorded webinar. There's also weekly market analysis that you can see, and the different snippets on the market plan. So one of my, there's short videos on trading decision-making process. How do I make a trading decision? What is the iterative loop of trading plan, trading journal, finding trade, executing trade, how to manage self-serving bias, confirmation bias, recency bias. So I encourage you to look through these short videos, and they will help you to deal with uncertainty, because right now we, including myself, on the days when the market is going higher, right? On one hand, I think this is a great opportunity, and I want to, I have a fear of missing out that the market is going to break through the 300 level, and by the end of the year, it'll be at 340 level, right? So on one hand, I have a fear of missing out of another, 10 to 15% move to the upside. And on the down days, with escalation between US and China rhetoric, I'm concerned, or I'm afraid that market will be in prolonged recession, and unemployment rate will stay elevated for the next several years. So prolonged recession. So we're all experiencing these feelings, the start of war, and it's very important to have tools to be self-aware and how to deal between these forces. So that's trading psychology. Again, concentrating on things that we have, concentrating on things that we have control over is trading plan. So if you've ever been in a live trading room environment, in the Rosie, thank you for kind words, welcome. If you've been in a live trading room environment, I always, before market opens, I say, well, we don't really know if US will impose tariffs on China, or if China will retaliate on Apple products, or will there be a additional stimulus package, and when will it be passed, right? All of these are unknowns. It creates uncertainty, and very hard to control the inflow of the news, right? So, and the timing of the news, right? So the market can regain 200-day moving average. It can happen next week, or it can happen a month from now, right? So those things you cannot control, but what you can control is how do you approach trading as a job? What is the job of a trader? So if I have to post a resume, or if I have to post a job description, if I'm hiring somebody for trading, I would say, first thing that you, as a trader, first thing you have to have a trading plan. That would be a #1 requirement if I have to hire somebody as a trader. What does your trading plan looks like? How do you manage risk? How do you manage reward? How much cash you have in your account, right? On average, in my account, 30% of the portfolio is in cash. Then I would look, how do you approach portfolio drawdown? I usually would look for, in a trader, I would look in the job description, I would look at maybe 15 to 20% portfolio drawdown, right? Somebody who knows how to manage risk, 5%, if it's a long-term trading, I would look for 5% stop loss or less, depending on portfolio size that someone is managing. So less than 5% total risk, I would look for option trading, stop loss of 50%. So somebody who's looking for 50% stop loss for options trading, target gain. Again, depends on the strategy. It could be anywhere from 20 to 50% target gain using options. If it's a speculative strategies like unusual options activity or some alpha generating where you anticipate a large move or earnings, right? Earnings strategies, then it could be 2 to 1, 3 to 1 risk versus reward ratio. So cash is #1 requirement. Portfolio drawdown, if it's a 5% stop loss, how many positions do you usually have? If it's 5%, if you have 5 positions in each of them 5%, 25% risk, I think I'm comfortable with that risk, right? Or if your main risk is 2.5%, then maybe you can have 10 positions. So cash, portfolio drawdown, and how do you look at how do you do position management in terms of what are your stop losses, what are your target gains, what are your criteria for entering the trade, and what are your criteria for exiting the trade. So trading plan is great, resume is great, but you can have a great resume and it looks all nice and wonderful, and then you hire a trader. Then the next step is how well does the trader execute based on the trading plan. So the only way to judge this is to have a trading journal. So #2 requirement for job description, I would say, is to consistently have a trading journal. Trading journal to me would indicate what is the gap between the trader's trading plan and their actual execution of the trades. Because you can write a trading plan, but when you actually have to enter a trade and the market reacts to the unemployment news or to additional tariffs news or potential treatment of coronavirus, how do you make those decisions when the news come out, and how consistent you are as a trader? So to me, trading journal is important. I want to see basically how close you are following your trading plan. What's the gap between trading journal and trading plan? So trading journal should indicate how much cash you have before you enter the trade, how many positions you have, what is your maximum portfolio drawdown. It should indicate, reasoning for entering the trade. Let's say yesterday we were close to 73. I'm entering because I think 273 is a support. Great. Or the trading plan says, if you're short-term trading, right? If you're a day trader, basically say, well, if the model predicts 273, I'm going to go long. But if the model shows 286 overhead resistance for day trading, if I do see a stock getting closer to 286, right? We were at 285 once, 285 twice. It makes sense to go short because the model basically says 286 is overhead resistance. So if you short the market at 285 and you have a clearly defined stop level, let's say 1%, so at 288 you would get out and you're looking for 1% gain. In this case, 282 you would be out of this trade. So this makes sense, right? Your model makes a prediction the day before, 286 overhead resistance, 273 support. Stock market reached 285, you see overhead resistance, you maybe go back to 15 minutes, right? You see that there's a lot of overhead resistance at 286, so you maybe enter half of the trade 285, half of the trade at 286, right? Because you see overhead resistance 286, 287, and then if the market continues to rally, you execute your 1% stop loss, right? So you document that in your trading journal because you have clearly defined support levels, clearly defined resistance levels, and you execute your trade based on support and resistance levels, right? So those are the type of traders I would hire for the firm. And to me personally, those are the things that I can control. Irrelevant of the news in the market, I can control how much cash I have. I can control how many positions I have, what the size of my positions, what is the target gain and stop losses. And I can document that in my trading journal, and you will see in the live trading room environment, I would grade myself, right? I would say, if I follow my trading plan, right? If I follow my trading plan and I enter the trade, let's say I'm short at 286 and market dropped to 282, then I'm gonna put a grade A, right? I follow the trading plan and I made money. Let's say I shorted 284 and the market rallies to 288, right? 1% stop loss. then I would document that I got a B, right? I followed the trading plan, I traded at the support resistance level, but market continued to rally on the news or whatnot. I'll give myself the letter B. If I go short at 286, market goes to 288, and I say, listen, I think it's overhead resistance. Why don't I give myself another 1%? Then the market rallies to 92, and then I exit out, right? So I would give myself a letter D, right? I did not follow the trading plan, and I lost more money than what was written in my trading plan. If the market, let's say, goes to 290 and then has a sharp reversal and drops to 276, and I make money, I would still give myself a letter C, right? I'm not following the trading plan. In terms of the confirmation bias, everybody has a confirmation bias. This most likely not because I have a skill of predicting the market, but it's because I got lucky, right? The market went to 292, I waited, and then it dropped off and I made money. So by grading yourself in the trading journal and reviewing your grades on a daily basis, that will help you to build confidence and long-term perspective on trading and cement your trading rules. So that's trading psychology, trading plan, very important, right? These are pillars of successful trading. If you don't have trading plan, if you don't have trading journal, if you don't trade on support and resistance levels, if you don't look at probability of success and return on capital based on these support resistance level, I mean, you can have long. I have actually my nephew. He's in California. He's doing. He's a neurosurgeon. He's a neurosurgeon, and he's in residency, right? Fellowship. He's doing his fellowship in California, neurosurgeon. And now, everybody's concentrating on COVID-19, and there's not a lot of elective surgeries or cases, and he has free time. And he's obviously a smart guy, and we have these conversations about trading. He started trading, and you can see he's a smart guy. He understands support resistance. He follows social media, and he's texting me, "Oh, I made X number of dollars today, or X number of dollars," and you can see that he's made money for 1 or 2 weeks. But I asked him, have you, do you have a trading plan? Do you have a trading? Are you reporting? He's like, no, I kind of look at support resistance and I just trade. How many positions do you have? What is your time horizon? And his answer is like, well, I don't have a time horizon. I don't have, trading plan, trading journal. And I told him, listen, this is great, but at least I'm going to give you 2 advices. Always, keep 30% of your portfolio in cash, and just figure out what your maximum loss are on these positions, multiply by the positions, and that will prevent you from over trading, because you can be successful without these rules for 1 week, 2 weeks, months, 2 months. But when the volatility rises and you have these sudden drops in the market, like we've experienced in February and March, like we've experienced in August of 2019, December of 2018. So when you do have these black swan events, right? These are sudden, when we reach complacency and we have these sudden moves in the volatility and it sells off. And if you don't have these fundamentals in terms of trading plan, trading journal, you can make a lot of money for a prolonged period of time. But in my experience, and I'm giving my actually what happened to me, this is where you can have more than 20-30% portfolio drawdown. And if you have 30%, 40% portfolio drawdown, it's very hard to recover from these trades, right? Because you're going to make a lot of small trades, but you're going to have 1 or 2 big trades where you're going to lose more money than part of your trading plan. So I encourage my nephew, if he watches this video, and he probably does, to at least follow these 4 fundamental rules: cash, portfolio drawdown, well-defined target gain, stop losses, and look at the probability of success versus return on capital when you have certain expectations for the size of the moves in the market. All right, so let's see. So how do you trade in the current market conditions? Once you master your trading psychology and you can see in the technical analysis. So we have different portfolios. One is Elite Trading Circle. So Elite Trading Circle is where you have access to the trader log and SMS messages. So every time I trade, So let's say today I had an FXI call spread that expires today. So I close the FXI call spread. So I am, I have earnings play IR 25 put. Where's IR? All right, so I have IR 25 put spread that was part of the earnings play. So any trades that I make, they're my brokerage account is synchronized with the Tradespoon platform, and you get real-time messages. You get SMS message every time I trade, or you can go to a trader log, click, and see what trades, all the trades that I've done today, last 7 days. You can actually see all of these trades, right? Nvidia and Duke Energy. So every trade is recorded, and you can either look at the trader log or SMS message, or most of these trades actually occur during morning bell and closing bell, right? So if I trade during morning and closing bell, you can actually participate in a live environment and watch how I trade and how I teach. So we have a morning, Scott, and we also have Scott, who are head coach, Scott Beck. So morning bell, closing bell, and all of the trades that I do, this is elite subscription. Right, so I encourage you to try it out. You get 30 days free trial, risk-free trial. I mean, we still require a credit card, but if for some reason this is not what you're looking for, we will give you a refund. So that's Elite Trading Circle. If you don't have time to do day trading or short-term trading, you're busy, you have a job, or you just don't have time, we have different portfolios the same way you can follow. First one is a premium portfolio. Every week we publish a pick. Last week we published Microsoft. Go in, buy Microsoft at $3.20, right? So in my personal account, through the trader log, you can actually see that as soon as I got filled for $3.20, this is 165, 170 call spread. You can see the message, you can look at the chart, see how Microsoft is trading, right? It's been in strong uptrend. And you have a choice. If you're not comfortable trading option spreads like I do, then you just buy stock, right? You can buy stock or you can buy an option. And there's instructional video explaining my view on the market and why I entered this trade. And there's these familiar marks that I always look when I trade. What is my return on capital? What is my probability of success? And what is my estimated move analysis, right? And when does this trade expire based on the options data? So that's an example of a premium service. I do about 4 trades a month, right? So it's 1 trade a week, 4 trades a month. You can trade stock or option spreads. You get email and SMS message when I get in, get out, adjust the order. So this is a great way to either learn how to trade, or if you're an experienced trader, this is will give you entry point for these positions, right? And if you're experienced trader and you look at Microsoft, I think I entered the Microsoft 2 days ago. Maybe you will say, Microsoft under pressure, maybe I'll only do a half of the trade, and if it drops to 50-day moving average, I will do a second half of the trade. So that's also fine. You can do dollar cost average, you can trade around position, but that's the premium service. This is where I trade option spreads in my live account, and you get email and SMS message every time I trade. Some of our subscribers are not comfortable trading options, so we have Robo-Investor. Robo-Investor, similar to premium portfolio, the difference, I trade stock, so I don't have to be correct on the timing. Options, you have to be correct on the timing and on the direction. On stocks, you just have to be correct on the direction, right? Timing may take 1 month, might take 3 months. On average, I would hold position 3 months, but sometimes I hold positions for 6 months, So that's the Robo-Investor, similar fashion. There's 4 trades a month, about 2 trades every other week getting published. And again, you have access to portfolio, orders, SMS message, every time I would get in and get out of the trade. So that's Robo-Investor portfolio, right? So we have 3 portfolios that you can manage. You have portfolio that I manage in Live Trading Room and Elite Trading Circle. You have portfolio that I manage on the premium portfolio and Robo-Investor portfolio. So those are the differences. And that's been a common question, Vlad, which one do I need? The reason we created multiple portfolios because different traders have different background. Some people comfortable trading stocks, Some people are comfortable trading options. Some people want to do only day trading or only earning strategies. So then we have this live trading room environment. One thing I would caution you, some traders, like elite subscribers, right? They would have access to, sorry, some noise. Let me just switch my headset. Let me know if this is better. James, oh, I like that quote. Yes, by Mike Tyson. All boxers have a plan until they get punched in the mouth. It's very applicable to traders. Yes. Fast. Thank you. That's funny. We do have one-on-one training. Unfortunately, I just don't have time to do the coaching. It's my passion, so when I completely retire, I'm gonna do that. Can you guys hear me? Is the sound okay? Better? Perfect. So we do have one-on-one coaching. Scott Beck is one of our coaches, main coaches. We have other coaches. This is a one-on-one custom program. That was the question. I encourage you, it's on the bottom in the footer. You can go and apply on one-on-one coaching. So if you are interested in one-on-one coaching, which is very important, just like Mike Tyson quote, it's all nice and wonderful until market sells off 5%, and then what do you do in the matter of 5 minutes? So that's a great example. So it takes time, right? Just like a boxer, just like a pianist, chess players, right? I learned a lot of openings, and I know them, but until you practice them and until you play chess, you're not going to get better until you keep playing and playing and playing and playing. And sometimes you have an opening, you have, I don't know, Sicilian opening or two-night defense, and things happen, right? And it all depends how much sleep I get. I actually noticed that if I play more than one game as I get older, most of the time I lose the second and third game because, just my brain gets tired and I just can't concentrate long enough. So, and it's great that, I've been playing chess for 20 years, not more than I played for 40 years now. Well, I'm actually getting old, but anyway, but I played chess for 40 years now. And the point is that how much sleep I have and how much practice I do will influence the outcome of the game, and that's applicable whether you're in a boxing match or you're in a trading match. There's no difference. Some people do think or expect that there's a magic formula. Like my nephew, he thinks that if he just listen on the news and there's unusual options activity, and he's just going to buy that options that have a lot of unusual option activity, he will always make money. I mean, in theory, yes. In practice, no, right? In practice, there's there's a lot of things that can go wrong, right? So it's the same thing, just like in boxing. It's all great and wonderful until you get punched in the mouth, and then your plan kind of has to be adjusted, right, very quickly. So trading, the same thing. How self-aware you are and how well you control your emotions and how much energy you have will definitely influence the outcome of your trading. So we do have one-on-one coaching program, just like for Mike Tyson. It's important to have a good coach. Just like for chess, I played for 40 years, never had a coach. And my daughter started playing chess, and I actually have one-on-one sessions with her chess coach. And I got a lot better, even though I've been playing for 40 years. But in the past couple of years, I actually play better than I played 30 years. Why? Because I have a coach who played chess, who went to world championships, US Open, and she gives me things that I never knew, and openings that I never knew, or strategies that I never knew. And I'm a lot better chess player. Skiing is the same thing, and it goes on and on and on and on. So coaching program, if you want to, you can definitely check that out. I'm going to send the link if you guys are interested. Faust, thank you. James, thank you for your comments. Oh, also the time executed. That is a good question. Okay, yes, it's possible. I like your feedback. Yeah, the question was, is it possible to show the time the trade was executed? And it does show the time.
Sorry about it. It does show. So FXI call I got executed at 10:05 a.m. and this is Central Time. So 10 minutes ago, I got filled in FXI and I placed AMAT order to close AMAT at 8:49. How is AMAT actually doing now that we have a sell-off? This is earnings, okay, so still have some room. Okay, good. So this is an example of where yesterday sold the credit put spread and credit call spread and now managing position. So by the end of the day, as long as it stays above 49.5, this should be a successful trade. Okay, SMS will address the SMS. Yes, will research, thank you. Faust, thank you for your question. Yeah, both. So question on the, well, Yellow Tunnel, there is a new service, Aggressive Power Trader, right? Let me, sorry, log in. So the question is, what's the difference between Yellow Tunnel and Tradespoon? Again, Tradespoon, I started in 2012. It's been 8 years. My background is trading. My background is actually not trading. My background is computer science and coding. So all my life I've been in coding, and then I started in Options Express in 2020. So it's been 20 years ago, and that's where I've always been fascinated with options. Always want to learn it. So this is how I got into trading and coding. So started Tradespoon about 8 years ago with the idea that I have access to financial engineers, modeling, neural networks. I really love computer science and statistics. So I applied statistics and modeling to the trading and build models to help me trade, right? And that's the idea behind Tradespoon. But then I quickly realized, what do you do when the market, statistics don't work, right? We have Desi from Ireland basically says, well, sometimes statistics works and sometimes they do not. And it's a true statement. None of the statistics work, when you have an outlier event and VIX jumps from 15 to 80, right? You can apply statistics because you cannot learn on the data. Statistics implies that you can have a data set. You can input a data set into the model. You can learn on the behavior of the prices, price actions, price movements, find patterns, and extrapolate into the future and give you a confidence level of, what is the confidence that the price pattern will repeat itself and make a prediction, right? And a testing, and it gives the scores of confidence level and how many times it's been successful in the past. But when you have market that drops 33% in a matter of 4 weeks, well, you cannot learn on that data because it never happened in the past, right? It hasn't never happened in the past 100 years. So how can you learn on that, and how can you predict that, right? Once the stock market is trading in the range and it goes up, down, and volatility is back to historical average or to a constant, then the model can learn, right? So you can see in the past few weeks, model is a lot more successful than it's been when it's dropped here. And here, what I realized quickly, that the only way to deal with these sharp sell-offs and rallies, it's not how well you know statistics and the models. You can have the best statistics and models. It's not your IQ, it's your EQ. So your emotional intelligence is a lot more important when volatility rises, right? So that's the impetus for starting Yellow Tunnel. So idea behind Yellow Tunnel is that emotional intelligence and being self-aware, and when you get punched in the mouth, right, that analogy that James alluded to, how do you get back together quickly, and how do you make sure that your emotions and your feeling don't overcloud your judgment and you don't get emotional and you can go back and execute your trading plan? Because if you get punched in the mouth and you get emotional, you will lose that fight, right? You will lose your fight if you're just going to throw away your plan and you're not going to go back to it. And maybe Mike Tyson will not agree with me, but at least that's my opinion. If you're negotiating, if you're trading and you get emotional and you deviate from your trading plan, which happens a lot, that's more than, if I had to guess, then more often than not, at least in my case, I would lose, I would sustain unnecessary losses. So that's the idea behind the Yellow Tunnel. We have Weekly blog also talks about different ETFs and which sectors I think is leading the market. We have weekly trend analysis where I explain my view on the market for this week and for the next months to come. And then we have trading discipline. This is where Dr. Maneker comes every month and talks about how to deal with uncertainty in the market and how to be, how to do labeling exercises, how important the gratitude, the sleep, the emotional capital, different tool sets that everybody should have in their disposal. Every time you confronted with uncertainty, whether it's a stock market uncertainty or it's a job uncertainty. A lot of people are staying home. A lot of people lost their jobs. This is the important, trading psychology in general is just as important as finding treatment for coronavirus, right? So that's the idea behind Yellow Tunnel, trading psychology, and that is the part of the recipe that's required. So all of this is free, right? We have a trading discipline, trading plan. We talked about future forward exercises, emotional intelligence, confirmation, different biases that drive our decisions, and how important at least for you to be aware of these biases. And then we did launch more. I think Dr. Maneker talks about, let's see where they're, trading journey, right? Let me see. Let me see, the ego game theory. Trading is a journey, right? So Dr. Maneker talks about trading as a journey and the step of evolution, right? First, you get excited, you're learning about trading, you start trading. Then, you start building trading plan, then you start doing trading journal. And then the last stage, the final stage of the trading is when you are if you read the emotional intelligence book, they talk about different phases that your brain has, or different, not phases, different modes, right? You have this analytical mode versus free floating mode. If you're a painter, or if you're a musician, or if chess player, that at some point your brain is analytical mode, it's trying to solve the problems, and sometimes your brain switches into more of a free floating mode, where things are natural, you don't spend a lot of mental energy, and you really enjoy the process, right? You're kind of in the free flow state of mind, so that's kind of the journey of a trader or a musician or boxer. It's when you get into this mode where you have enough skills, you have a trading plan, you executed it so many times that you are getting into this free floating mode. So that's where this is kind of the idea of Yellow Tunnel trading psychology and aggressive power trader, right? Aggressive power trader, the idea is that if you traded, some people just want one trade. They just say, Vlad, don't give me all these symbols. I just want spiders. When do I buy spiders? Okay, 273. When do I sell it? 286. That's all I want to know. Great. But some people, more experienced traders, or based on your psychology, I guess, you want to have many choices, right? So aggressive power trader, the reasoning behind aggressive power trader, that we give you options, we give you option trades, right? We give you what option trade you can trade at what buy and sell levels, right? And we give you more than 3 choices, right? So here you can see Home Depot. Home Depot is leading the market, right? Today market, spiders are down, right? Right now 1%, but Humana is up. Home Depot is up, and Campbell Soup is up. So we give you new choices and sectors that are leading the market. Healthcare, some of the retailers like Home Depot. PayPal is probably in line with spiders, but we're giving you choices, and we're giving you support and resistance levels, and also 10-day projections. And if you want to keep this position long-term, what is the long-term projection for these names? So that's the idea of the Yellow Tunnel aggressive power trader. On Tradespoon, when I trade in a live trading room, I trade aggressive power trader stocks, right? So all of these stocks I trade in a live trading room environment. If you're not in live trading room environment, we do have active trader model, right? That gives you 3 stock and option choices, similar to like PayPal is the same one, but only 3 choices, right? And then we give you a weekly trader model that I trade. So this week was Visa and NVIDIA. So NVIDIA was a weekly trader model, and that's why I traded NVIDIA, this week, right? So in live trading room environment, we have a weekly trader model. It generated signals. So I said I want to collect, in this example, 30 basis points. So I sold an option for 94 cents, which expires probably worthless today. So these are the models that I trade in a live trading room. Live trading room is only available on Tradespoon. And during live trading room, I trade all basically 4 models. I trade active trader, monthly trader, weekly trader, and aggressive power trader. And some people want more signals, some people want less signals. So those are the, I believe in choices, and that's the choices we give. So those are the tools: weekly trader, active trader, and monthly trader, if you're looking for the models. If you're looking for research for long-term decisions, I base them on the models, on this seasonal chart where we have Tradespoon scoop and bears. I think it's a very powerful model. It shows 4 out of 4 predictions. I have a historical data that shows that when the model turns positive and shows 4 out of 4 predictions, that usually coincides with the bull trend, right? In the next 50 days, I think the accuracy is about 75% chance that average price on Sunday and average price 50 days from now, the slope is up, right? The prices are going higher. And for option trader, it's important information to know. If you trade something that's everything is down, I don't know, let's say JP Morgan, what was the model? 3 out of 4 lower, I would be careful with JP Morgan. I think there could be more sell-off, and we've seen sell-off in JP Morgan today, but potentially it reached, oversold situation where it actually makes sense to go long JP Morgan. TJ, thank you. Carmen, thank you. Bo, aggressive power. So in a live trading room environment, I trade aggressive power trader, right? So aggressive power trader, this is if you're not in a live trading room, right? But if you're in the morning session live trading room, the only reason you might want to get it because you can prepare, right? Because you've seen in the live trading room environment, it opens at 8:30 a.m. and I showed you these symbols, and you basically have to do research together with me during live trading room. This gets published at 8 p.m. the day prior, right? The night prior, so then you can do your own research, and maybe you want to keep Home Depot long term, right? Maybe you see it's an uptrend today. Humana is an uptrend today. Next 10 days, it's an uptrend, right? And maybe you want to have exposure, so you want to do additional research. So that gives you kind of a chance to have access to these short-term bullish signals, and you can do your own research to prepare the night before. Oh, time executed on premium trades. Okay, Paul, got it. Thank you. Take it into consideration. If you want to buy calls and puts, question, if I want to buy calls and puts, see, not sure. Try to zoom in. I'm not sure. Everybody is fine. Try to zoom in and zoom out. So I usually zoom in or zoom out or try to relog in. Because if you can see my face and you cannot see the screen, that means there's multiple screens and one is hidden. So try to maybe alt tab and try to go through multiple windows on your screen. David, yes, Tradespoon, we do have financial engineers that are constantly refining the models and checking the models on weekly basis and running back tests. We're running back tests every week to make sure the symbols that we are producing has still valid in the current market environment. Because if you know about the models, they work until they stop working, right? So you do have to adjust them. DHT zone, Carmen, DHT zone. All right, I'm learning something new. DHT zone. All right, maybe not. Okay, maybe you can send me. I'm not sure what DHT zone is. Okay. Can you combine strategy A and B? So TJ, for active, so if you want to trade options, right? The first question, what is your time horizon, right? As a trader, if you trade in options, if you just say, I just want to buy puts and calls, that's not enough, right? You need to have a time horizon, right? So a lot of people trade 50 days till expiration, right? That's kind of, a lot of people trade more, some people trade. So you do have to have time horizon. So our time horizon, we have active trader. So active trader, you can trade stock and options, right? If you want to trade option, PayPal option, the time horizon on the model is 1 to 2 days. So you can enter the trade, you can buy a call when PayPal drops, or you can sell, let's say 140 put, because you think after the strong earnings, 140 is a support, so you might sell 140 put. If you hold in position 1 or 2 days, you are doing it based on the signal from active trader. If you decided to hold this position for a month, then this is because initially you bought it because there is a bullish momentum short term, but long term you're buying it because you think PayPal, everybody's staying at home and using their credit cards, and PayPal is the main beneficiary of lockdown, right? And they had the best quarter ever since they went public. So originally you buying it because of the active trade, but you holding it longer because you have other reasons, or maybe just because you don't have a trading plan and you're indefinitely holding calls, right? That also could be a reason. But the first question is your time horizon. So this is the model that basically says in the next 2-3 days there's a strong momentum behind the PayPal. It doesn't say that there's a strong momentum for the next 90 days. It just says 1 or 2 days. If you want to trade weekly trader, this is 2 to 5 days. So in the next 2 to 5 days, that's the holding time. The momentum carries in the next 10 days. Visa and PayPal or Nvidia, these are the stocks in strong uptrend. And if you buy, here we said at 182, at 181, these are the entry points, right? And you can see how Visa traded and Nvidia. So these are suggested entry price and suggested strategies. Can you combine them? You can do dollar cost average. Like Nvidia is a perfect example. If I'm on Monday, I bought it, right? And the market sold off. I mean, granted, I sold 310. What did I sell? 310 or 305? I don't remember. But anyway, I sold 310 put, so I gave myself a little bit more room, and the trade was in my direction. But you can see if you bought it on Monday, right? When did the signal came in? May 11th, right? So if you bought it on May 11th, right, the stock, well, you maybe just broke even by now, but you just need to be consistent, right? You can always buy on previous close, and then you would have bought it at on Monday when the market opened. I don't know what the price was, but more likely or not, you would still be down. Or you can wait for strategy A. If you see pre-market on Monday, the pre-market is down, or you want to wait for our predicted low price, which is 182. Then at this point, well, you'll be maybe close to break even. So strategy B and strategy A reflects more market conditions. Do you see pre-market futures, right? If you go, we have a futures market, and if you look at the futures S&P mini pre-market and you see market is down 1%, that's where I would recommend wait for strategy A. Wait for predicted low or previous session low. Because market is down 1%, and more likely than not, the strategy A will get triggered more likely. Marvin, thank you. Stay healthy. I appreciate your kind thoughts. Lenny, all right. It was another nephew, but okay. All right, and then, all right, what do you think about Tesla? I don't own Tesla, but obviously it's a very strong stock, highly correlated to the market, right? It was down with the market. I mean, more than 50%, right? It rebounded almost to 52-week high. Personally, I'm an owner of Tesla, and I have a bias, so I love the stock, but it's obviously overbought. So if we do have market correction, it will drop. But I would, if anything, I would do dollar cost average and buy at these support levels. Obviously, 200-day moving average has been a great support, and 50-day moving average is a great support. But at this point, I think it is overbought. Dan, the question was how do stocks get picked monthly, active, and weekly? So we have a team of financial engineers that are basically trying to answer the question, what is the momentum behind the stocks, short term, mid, weekly, or monthly, and it's different models. And you can look at the chart, right? You can see, let's say, JP Morgan, right? If you look at the monthly chart of JP Morgan, right, well, this is obviously a very strong stock in the confirmed uptrend. Looks like, Elliott wave 5, right? 1, 2, 3, 4, and then, most likely we're going to have wave 5. So you look at the long term and you basically say, well, this is a bullish stock. I love it, right? But then you switch it to 45 minutes and the picture is completely different. It's very weak stock that's in a downward momentum. So how much data you're analyzing and what your time interval is will dictate what strategies you will use, right? So that's why that's a common question. I just want to buy puts and calls. Well, what is your time frame? If you want to buy JP Morgan puts and calls and you want to buy leaps that expire this year or next year, I think this is a great strategy because I think JP Morgan is going to continue going higher, and our monthly model, right, shows a strong buy signal. But our active trader model can be showing a downward momentum, right, and a downward signal, right? So it is conceivable that the monthly trader will say buy and the active trader will say sell, because different amounts of data is being analyzed and you give more weight to the most recent data, right? For active trader, the model gives more weight to what happened in the past few days. Monthly trader gives more weight to what happened in the past quarters or years. So these are different models that make different prediction. And that's been a very common question that, sometimes people will say, well, Vlad, if I looked at spiders, it's 4 or higher, strong uptrend. But if I look at stock forecast toolbox, it's neutral or negative. Why is there such a discrepancy? This is like one of the most common questions. Basically, and the user would say one says it is going to 268, and the other says it's going to 300. Why? Why there is a discrepancy between two models? Which one is wrong and which one is right? And my answer is usually, well, they both can be wrong or they both could be right. Right? Short term, spiders can drop to 265 level based on the model. That's what model predicts. We can go as low as 265. I personally would be very surprised. 272, I would not be surprised, but 265, I would be very surprised. But that's what model shows short term, based on the model that's optimized to make predictions for the next 10 days. But the model that's optimized to make predictions for the next 50 days basically says, yeah, short term, we can have a pullback. But long term, going into next 40 and 50 days, the average price will be higher than it's been on Sunday. And you can interpret it as a conflicting signals, or you can interpret that short-term momentum is to the downside, long-term momentum is to the upside. Weekly, so model runs on the weekend. On Sunday by 6 p.m. on Central, the seasonal chart gets updated with new information. The weekly trader gets updated. The monthly trader gets updated. The active trader gets updated. So all the weekly and monthly models get updated at 6 p.m. Central on Sunday. And then active trader gets updated every night, right? Every night by 9 p.m. Central, around 8, 9 p.m. Central, models is finishing, consuming all the latest data, running the models, and that's where they published on daily basis at 6 p.m. All right, guys, it's 10:41. How the spiders are doing? Looks like market is continue its down 1%. So I would wait till the end of the day. I think if we close below 276 or low, that would be a win for the bears, and then we'll probably retest 272 next week. If we close above 286, I think that's the low for the next few weeks. All right. David, thank you. Okay, yeah, just let me know. Sometimes, headsets are better sometimes. Okay. All right, stay healthy. Thank you for your kind words. Invest into your emotional capital. Spend some time with family and friends. Recharge, get some sleep. And, there's a closing bell today if you want to try Elite Circle or if you're a part of the Elite subscription, or I will see you guys on Monday. Robert, Buck, Carmen, Phil, JT, David, Dan, Lenny, Marvin, Desi, Faust, Bo, TJ, Joseph, Gordon, or Levester, and everybody else. There's a lot of people today on the webinar, so I can't list everybody, but have a great weekend. Enjoy your time with your friends and family. Stay healthy, stay safe, and I will see you guys either today or Monday. Thank you.